While the big four in Congress head to the White House, members of the Senate Banking Committee this morning are focused on that other financial drama of 2023. Right now, the former executives of Silicon Valley Bank and Signature Bank are testifying on Capitol Hill, answering questions about how the banks collapsed. CNBC senior markets correspondent Dominic Chu is following it all for us, as he always does. Dom, good morning. So regulators were forced to take over these banks after customers essentially launched a run on the money. What are the former executives saying about that today?
Jose, they're basically facing a slew of different questions and pointed ones at that. About what went wrong and how it could have gone so wrong in such a bad way, leading to a few of the biggest bank failures in U.S. history. Now, in the hot seat specifically, so to speak, are former Silicon Valley Bank CEO Greg Becker, former Signature Bank of New York executives Scott Shea, who was the former chairman, and Eric Howell, who was the former president. And much of the message so far has gone towards the unprecedented, so to speak, nature of how these banks ultimately collapsed. It was a combination of things like Federal Reserve interest rate policy being tightened at such a quick pace, all the way to the rush of many depositors to withdraw their money in such a short amount of time, for which maybe even aspects of social media were partly to blame in causing those so-called runs of the bank. Now, Becker did address just how off guard some of these bank executives were caught, given how quickly people demanded their money back. And here's what he had to say in response to a question about just what exactly happened. Take a listen.
As we looked at liquidity overall, relative to the size of bank we were, we certainly felt that we had ample liquidity and were able to, even with the fastest bank run in history, 41 of the $42 billion of deposit outflows that day, that Thursday, were covered by SVB. And we could have handled even more. It's the unprecedented event, the fastest bank run in history. From our standpoint, that was the anomaly.
Now, Republican Senator Tim Scott from South Carolina just flat out said that Becker's lack of judgment showed that he should not have been running the bank to begin with. So, Jose, there's certainly a lot of heated rhetoric trying to assess blame and to try to figure out what exactly led to the ultimate collapse of these three financial institutions.
Dominic Chu, thank you so very much.